Return on equity or ROE is one of the most important profitability metrics for investors because this measures how effectively the management is using the company's assets to create profits. A positive ROE indicates that the company is generating profits over shareholders' funds, whereas a negative ROE indicates that the company is giving losses. Return on equity is calculated by dividing net income by shareholders' equity. Net income is nothing but the net profit after tax, but before distributing the dividends. Shareholder equity is equal to total assets minus total liabilities. For example, consider company A, which has total assets as 500 crores and total liabilities as 200 crores. Then the shareholders' equity will be equal to 300 crores. If the net income after taxes is 100 crores in a year, then the return on equity is net income divided by shareholders' equity, which is 33%. If a company has high return on equity, then it signifies that the company has strong financials and business model that enables it to deliver high returns on the shareholders' funds. In our example, the ROE value indicates that the company A can generate 33% per annum on shareholders' funds. Go to Trendline. You may log in using your Google credentials. On the top right corner, you will find a search box. Type in the name of the stock that you want to analyze. Let me search for TCS. Click on the options financials under the stock name. This will take you to the fundamentals or financial section of TCS. Now go to the submenu financial ratios. Scroll down and you will be able to see the ROE annual percentage. The current annual ROE of TCS is 38.44%, which is very good. Comparing the current ROE with the ROE of the past years will give a good idea about whether the company is able to sustain and grow the profits every year. If the ROE has consistently increased in the past few years, then that indicates the company's ability to sustain and grow the profits. In case of TCS, we can compare the current ROE with the historical values of the ROE to understand if the company is able to consistently grow its profits. The ROE in last 3 years has increased from 30.49% to 38.44%, indicating that TCS has been able to sustain the profit growth in the last 3 years. A sustainable and increasing ROE over time can mean a company is good at generating value to shareholders because it knows how to reinvest its earnings wisely so as to increase the productivity and profits. Let us screen for all those stocks which have a ROE greater than 20%, and also the ROE has been increasing steadily in the last 3 to 5 years. Create a new screener in Trendline. Let's put down our conditions in the query to screen for all the stocks whose ROE is greater than 20% and also has shown an increase in the last 3 to 5 years. Sort by market cap to have the large cap stocks in the top. You may see that Hindustan Unilever, Nestle, and Petronet LNG are the top stocks with steadily increasing ROE. On contrast, a declining ROE can mean that management is making poor decisions and reinvests profits in unproductive assets. Check the financials of Bharti Airtel. The current ROE is negative and also it has been decreasing in the last 3 to 5 years. This indicates that the stock is not performing well financially and you need to be careful before taking a decision to invest in it. Let us now screen for all those stocks which have a ROE lesser than 10% and the ROE has been decreasing in last 3 to 5 years. Create a new screener and put down the conditions in the query to screen for all the stocks whose ROE is less than 10% and also decreasing in last 3 to 5 years. sort by market cap to have the large cap stocks in the top. You may see that Bharti Airtel, Indigo, and IDFC First Bank are the large stocks whose ROE is not doing well. It is better to avoid investing in these stocks until they recover and come back on track. Hope this video has given you a good understanding about return on equity and how to choose or avoid stocks based on it during investment. Subscribe and stay connected to our channel for more useful videos on personal finance and stock market investing. Thank you, friends.